All right, welcome everybody to the live stream. Of course, this is our Wednesday webinar series. You've got Tyrone and Thomas from FX Evolution ready to kick some ass, hopefully with the community today, and pick some good positions from a technical analysis standpoint. Tyrone, how have you been this week, man? I'm hearing scary things out there in the west side. Is that right?
It seems to me that, Ocean Grove and Barwon Heads may not be safe. I see they've got 3 cases in Barwon Heads of the dreaded virus. So let's see what happens, eh?
I hope you don't go to 14 days of lockdown.
It might be a 14-day lockdown, but that's okay. 14 days won't stop us from doing live feeds.
That's damn right. We don't stop here, and even if we get locked down by the government. Look, Tyrone, I think the best place to start today is just to quickly discuss a few little housekeeping things that you just want to know about the market. Firstly, we saw core CPI come out yesterday. It was quite high. Obviously, that sent shockwaves through the market. If we look at the actual numbers here, what was going on through the core CPI numbers, I mean, there's a lot to break down here. Basically, all food was up, which is customary with inflation kind of concepts. So all food was more expensive. That could be supply chain shock, could be a lot of things. But that's been a reoccurring kind of thing or theme that's been going on here. We saw energy up very heavily. Makes sense. I mean, why wouldn't it have been? We saw the commodity going up. I'd expect that not to be a big concern, and the market will accordingly look at that. That's just a recovery back to the zone. And I think this is most interesting, Ty. You know, with a trend like this, would you be selling your used car right now? We have a 10% rise, a 7.3% rise, a 10.5% rise, and now we're looking at a 45.2% rise for unadjusted 12 months ending. It's the best time ever to sell your used car.
It is, and I don't understand it. I don't know why. It's funny, it's funny you say this. I was actually thinking of toying with the idea of selling my Ranger, because it's like 2 years old, and it's like, I didn't get the right tax deduction on it when I first bought it. I thought, oh, maybe I should do it. So I got a price on a new one, and the new one is like, I think it was like 65,000, and they're telling me that I can get 60 for mine, and it's like 2 years old, and it's got like nearly 60,000 Ks on it. Now, I don't understand why somebody would pay that much for mine when they wouldn't go out and spend another 5 and get a brand new one. And that's the problem. That's what's striking me really strange with this whole, used car. I thought it was actually a bigger problem when they had a supply chain problem. When they couldn't get cars, I could understand it. But now these cars are available, Thomas. So I'm not really sure why the used car market's so high when you don't have to spend very much more to go get a brand new one. Can you explain that to me? Because I don't understand it. I understood it 6 months ago when no cars were coming in because the ships were on hold and you couldn't get one, so you had no choice. Now you can go buy a new one. So what the hell is going on?
WRXs, Ty. Those 3 letters, WRX. It's everything to the market in Australia anyway. Anyway, we're not talking about cars. We're talking about the markets. But of course, that core CPI is one thing. Then we've got Jerome Powell, the Papa Powell himself, coming out and having a discussion today. Look, the market's going a little bit green into this event. We've got the SP500 inking out a small green after a sell-off at the close. But as we know, when Jerome talks, this is often what happens with the market. Goes up into anticipation, Jerome opens his mouth, goes down, and then we see recovery afterwards. Now, depending on what he says, which will be, every word will be critiqued, we will see some shockwaves through the markets, and it matters purely because they're talking about tapering. We know that we don't want the economy, we don't want inflation to look like it's rearing its ugly head, because of course that means taking away the beautiful stimulus that's been supporting a lot of these markets. Let's get into these TAs though, Ty, and I want to just congratulate people that have been in Euro Pound. I'll give you a clap because I got my alerts this morning and I thought, wow, that thing finally is moving heavily over the last couple of days. So we're down here almost at the bottom. And I guess what it shows is that when you're looking at dailies, look, it can take a while. But in general, if your analysis is a series of lower peaks, lower highs coming through here, and we don't have any closures above that kind of line, what does that tell us, Ty? It tells us that we're doing correct analysis, but more importantly, that it works when you play it over a longer time.
The daily very rarely lies, and that's why I think we like the daily so much. I know, look, we harp on about it a little bit. I know everyone, a lot of people in the room really like to trade the smaller time frames, and look, there's certainly room for them. But remember, it's the old saying that the bigger the time frame. I think it's my saying. I think I made it up. And I'm 100% believe in it and that's why I say it, because the bigger the time frame, the more important the signal. And it is so true. Like in everything, it doesn't matter whether it's lower highs and lower lows, patterns, because when the bigger time frames are at play, everybody's had a chance to consider it. Every market in the world has got a chance to consider it on a 24-hour level. It's not like a 15-minute or a 1 hour where you're basically session dependent. Okay, when you're looking at a daily and a weekly chart, it's really, really important because the market has considered the levels. So if it's making lower highs and lower lows on a daily chart, you know it's serious. This is like you're talking about weeks and weeks of action here, not a couple of days. So it really has a chance to consider the levels, and that's why I think they work out better. I love the daily. I mean, we always say it's our favorite, but it's our favorite for a reason. That's because it's the one that's most consistent, really.
Exactly.
No doubt.
Consistency is key. And look, sometimes people expect things to be done in AMC time, Ty. And AMC time means 24 hours or less, maybe a few minutes actually to get you 10-20%. Sometimes it is like this, and if you hold true to your concepts, hold true to your stop losses, etc., and you let it meander, you'll be surprised how often it will work. It's why we often do recommend to some of the people in our community that they open a demo account. They have a demo account or a small trading account. They have their normal live account. Let's see which one does better. And I bet I
will guarantee you that the ones that you leave and set up on the dailies, you're going to look back at them and say, wow, why aren't I just doing what Tom and Ty said? Because I think you'll be surprised at how often they will work out. And it's actually so simple in the setup too. You need to spend less time in the charts. But look, everything starts from the daily and we work our way down from there. Okay. So, we know that we like the levels. If you want to trade short, of course, this is why we stress, even if you're not trading the daily, make sure you at least look at the daily before you go taking small scalps on the smaller time frames to make sure that you are at least going in the right direction, right? Really, really important.
Absolutely correct, Ty. So here we get down, this market's moving downwards here to the 89 kind of 50 zone. So as it gets down here, we expect a few things to happen. Well, firstly, when you hit this zone, will the pound start to actually weaken against the euro? Let's have a look at the pound to start off with. And it's in a very crazy weekly setup here. You've got basically a huge amount of consolidation on the weekly. It's not showing much strength or weakness either way. And it's just trying its best to not fall over. So is there trades here on the pound? I was kind of looking at it before the stream and I was thinking, do I like this anything? I think for me, one of the things I'll be looking for, let's say it does happen, is because we're forming base here, and we'll talk about the dollar index soon, if we get maybe through a 139, is that strong enough to take us to a 140, Tyrone? What do you think about this 1-2 kind of combo punch and that type of trade into the 200?
Yeah, I think if it plays out, I think it's got the opportunity to definitely do that. I don't know if I'd be pushing it much past that, though.
No.
I think the 140 will probably be the level. Certainly in the interim anyway. Like until we get some really big moves and trends start to happen, I think 140 is the best that you could hope for. But it's not one of those ones I'd be preempting. I'd want to be seeing that daily close absolutely. You got an 8 hour here, but you want to see a solid candle close above that level. And I'm not talking about, a pip or two. I'd probably want to see, a break of the 139, probably 15-20 really. A retest would be better. And then, you got a good scalp. And it is a good scalp. To the 140, I think it's a really good scalp. But it's got to do it.
I think this setup, closure above, pull back, little lightning bolt on a 5-minute time frame, or anything like that, just some sort of sign of life of the buyers, little bullish hammer, little engulf, whatever it is, just give us something extra, a little bit of tasty juice, and then we should be able to get into a day trade. That's the type of thing that Tyrone and I look for, and we've always looked for in these markets. So when we're trying to focus on, okay, we want to find a trade, we're going to set an alert for this level. We're going to be patient and we're going to know that there is another trade somewhere else within the next 24, 48 hours. We don't have to take this. We don't care. I don't care anything about the pound. I'm sorry if you're in it. But at this stage, it's really as simple as if it gets underneath this 137.49 tie, I'll be watching it this week. I'll be taking, potential little pullback shorts here. So if we get down, through, down, where are we taking it to? No doubt in my mind, this is the level. You're going to agree with that straight away.
Very obvious level. Yeah.
Great trades.
I think they're both obvious levels. I think they're both good trades.
Absolutely.
Take your pick. I love these trades because I don't care for the pound at all at the moment. I'll be caring if it breaks one of those levels. And because I think both of them are solid trades. Both of them are really, really good scalps, and I think they've got a...
Guys, I'm sorry about that. We had pricing problems there. There we go, fixed. Yep, keep going, Ty.
Okay, yeah, I like both levels. I have got no bias whatsoever to either side there. I think they're both as likely to work out as each other, really.
Yep. I think these are very good traps here on the pound, and certainly a currency we're looking at. Euro, US dollar, almost a totally different tale. It makes sense why the euro pound is weakening off. The euro US dollar is coming back here. Now, do we have... I was saying to you before this stream, Ty, I guess, like, do we have like a nice shorting market here? I guess I'm in two minds. Like, yes, you've got a new daily low. Yes, that should signal down to 171.56, but how are we going to play it? Is it going to be a 2 hour, like 20 that we see it bounce off? Is it going to be the standard 4 hour that we like using and it pulls back, hits around this area here, which would be previous support, and a 2 hour 20? Is that the zone we're looking at?
Yeah, I think all of them will work. I think it's just a case of really isolating the one that's going to fit your time frame for trading the best. Like whenever you're in front of the charts, keep an eye out for the one that is going to suit your time of day, really. I think all of them have got a good case. I think we know where it's going. If it stalls at this level here, the 117 is going to be a formality. So, realistically, pick your time frame to, I guess whether you're trading, whatever session it is, whenever it gets there, look for the lightning bolt and off you go. I think it could be any of them, really. All of them will pretty much do the same thing. I'd love a 4 hour. I mean, the 4 hour would be the sexy one. But you might have to take a 1 hour. Like maybe it might just drop too quickly. It's a funny one. It's been promising a lot, and it's been really doing it, but it's just doing it very slowly. But it has broken a key level now. Like it's certainly got lower where we needed it to get lower, and it's just a continuation now, really.
I just want to just say again how much I love this type of setup. A rejection week, effectively, of course, pin bar or shooting star. Then you get another shooting star. Then you get a follow-on close below. That, to us, is totally the momentum. This trade, I'd always take that trade. I don't care if it loses. I would take that trade. And you know what? If it reversed, Ty, I'd take that trade too. I'd go bull straight away.
Those 5 candles that are circled there are telling you everything you need to know about the Euro USD. You don't need anything else. You don't even need to know the levels. All you need to know is that price action. You don't care about the levels, don't care about indicators, don't care about MACD, God help us. All you need to know is what the price action is telling you in those candles, and it wasn't going long.
No, that does not look long at all. Speaking of price action and all sorts of craziness going on, I just wanted to talk again. I can't believe how many people probably make this mistake, but how good this educational advice is. And that is that if you're looking, again, this is a very similar scenario. We've got a rejection wick, we've got a rejection shooting star candle, and then we've just hit this level, and ahead of the Fed, after core CPI and ahead of the Fed, we're seeing the dollar index come back down. We know this 50 exponential moving average on the weekly is the key. This is the deal for the dollar index. Does it go up? Does it go down? And where I say the key educational content is here, and you can snapshot this and just remember it in your mind because it's that important. Wait for the follow-on. If you wait just that little bit extra to see the momentum come through like we saw on that other one, which was the Euro US dollar, you didn't get in on the first candle, which went back and gave you a heart attack. You didn't get in on the second candle until it actually went underneath. Now, you don't need to wait for the close. The close is great, but you need to wait for the follow-on. There is no follow-on here, Ty. It's just phenomenal stuff. When we realized that, it saved how many trades? A lot. And that made our statistics much better.
Yeah, 100%. And I think people are getting better. I mean, I know a lot of people in the community now are... No, I'm not going to say asking questions that make more sense, because not every question is a good question. But they're asking questions now. A lot of people are asking questions now relative to what we're talking about. So they understand in the first instance what we're kind of on about to begin with. And that makes it so much easier, because it means that, when we're answering a question or helping someone out, they're actually at a level where they already understand a lot of the market, and we're actually talking at a higher level. And I think a lot of the community is getting there now, which is awesome, because they're seeing what we're seeing, and what we're seeing is not magic. Like we're definitely not seeing magic. All we're seeing is actually what technical analysis is, and it's price action playing out. And a simple rule like that makes such a big difference. Now, yeah, this is just the direct opposite of the Euro USD. We know that, right? So, the candles that we saw on the Euro that we were talking about happened 8 or 9 candles ago here. So, there's no worries about that, but you must wait. Like, you must wait.
Yeah, we don't have a clear, really strong participation direction here for the dollar index. I just drew this theoretical. Imagine if we see another rejection like this underneath the 50 again, and then we see the follow on. You know what? I've got to get involved in the short of the dollar index. Now, conversely to that, if we see this thing bull above this bit here, I've got to get in long-term longs. I mean, that's the kind of concept we look at from the educational perspective. Why? Because we're breaking past effectively shorter stop losses. We're pressuring them out of the market. Yeah. And once we get that confirmation, Ty, I expect money to come in. And I mean big money. And it may be a few days. You're on a weekly chart here. You might have to hold it for a bit. But I do expect a big change in the way that we're seeing the dollar index very soon. Very soon.
Yeah, most definitely. I'll answer 2 questions here while we're at it. Huey says, would we wait for the weekly to close above? Absolutely, Huey. No question. The weekly has to close before we get involved in that. And Danny Ism says, here is a question. How can someone transition away from their day job into trading without quitting their job straight up?
Swing trading.
Danny Ism, swing trading, and also look at the Pressic account builder. It will be the godsend. If you haven't done that, do that. It's free. It's one of the best things we've ever created. We should be charging for it. We never did. I know it's changing people's lives on a daily basis, and that makes.
You're talking about the account, the account builder. Compounding.
It's free.
Now. Yeah.
The compounding way to it's free. You can transition away from your day job because it shows you how to actually build an account while you're doing it, while you're working, and it will give you the confidence as you increase your account. That's the only way to do it. I wouldn't actually recommend any other way to transition the way you want to. Other than using the Pressic account builder. Free. It's the best free resource on the internet. I'm certain about that because it is literally life-changing stuff if you stick to it. So, Dannyism, check that out. Okay, it's on our website. If you haven't got it already, do the Pressic account builder free, and it'll give you all the information you need to know on how to transition.
www. Whatever, how many W's, fxevolution.com if you want to check that out. So we have a question here about pound yen as well, Ty. Another one that's got a good, we always want to go the top down. So we know this thing's been a heavy trend. We know it's come back to the mean reversion for the first time. And it has done a bullish hammer pin bar on the weekly. Now, we go into the daily and we want to get a little bit more of the story. What's the story here? And Tyron's going to say, whoa. It's kissing the moving averages here. Well, you probably won't say that, but I will. This zone here is exactly where you expect some dynamic resistance to be found. Now, if we breach this level, Ty, talk us through why this is significant for all investors that use these moving averages. What is the change in dynamic, firstly, and why do we love being above or below the moving averages?
Well, in this instance, we love being below it because, the market has spoken. This is a daily chart. We're about to get a cross. And if you want to know the significance of that cross, we only have to go back to see the last cross and see how far back it was. We can't even see it on this particular chart. We've got to go, look how far back we have to go. It has not crossed since November. And that was about, how many cents ago? 20 cents?
Quite a lot. I think it's the beast. Yeah,
it is. So when this is about to cross, which is all but it would take a miracle and some blasting above for this not to cross. It's a significant point in time, right? So when was the last time it closed actually below the 50 moving average? Only about 10 or 15 candles ago, but then it quickly shot up. Now it's done it 3 times in the last basically month and a half, right? So it's significant that we're trading underneath the moving averages. We're about to get that all-important cross. But what is just as important is if price does rocket up and actually find consolidation above those moving averages, because then we have to think on our feet and say, all right, well, it's above a roll reversal zone. We're going to be looking for it's broken. It's basically held up, and it may well do it. It's not a given that it's actually going to go short from here. But by golly, I know what I'd be doing, and I know what I wanted to do because the short is far more attractive. But you need to be able to think on your feet. And as traders, we need to be able to identify very, very quickly if something has changed in the market that this could potentially go up, and it can. But there's no way that I would be longing this until at least several daily candles close above those moving averages. And I wouldn't be taking the initial break. I'd be waiting for the retest. If it comes back and retests it, then it's convinced me. Remember what I said. The bigger the time frame, the more impressive the information that you're getting. And you want to see, for it to retest that from above, it's going to take a week or two to play out. Very, very important. But traders for the short that we're seeing at the moment, and those moving averages being above it now is a big deal, a very big deal.
So you mentioned the trades to the short at this stage because it's underneath the moving averages. Now, obviously, it busts it, the trade would be over. How do we go about actually entering something like this? Are we looking for a 152.40 kind of closure below? I would say, yeah.
Yeah, because then you're going to get your pattern. You're going to get the lightning bolt, the all-important lightning bolt on a very serious time frame. I mean, you're going to get it on a few time frames, really. By then, you'd have it on the 4 hour, the 8 hour. Yeah, it's a bit of a party, really.
Yeah.
Good trade.
So for the short, we're looking for this. We're looking because we have support. That's it's a quad support. And then we've got another one, and we also know there's indecision here. Remember, just think about the candle formation. We've got indecision, long leg doji, decision made, little bit of bullying up here. Then we've got a retest of it, and then if we retest this again and we breach below it, to me that signals, all right, we're in participation. Let's get on board and start shorting this beast off. And it's right around that zone that we target this.
Oh, absolutely. And now, one thing I'm going to stress, and I'm going to stress this a lot. Now, I know a lot of people who are coming to these webinars now are probably being introduced to currency for the first time. And you're going to probably notice that we talk about, now Tom will talk all day long about going long in the stock market because inherently the stock market generally goes long.
True.
You've got to be very, very mindful with currency that long or short, they can go short for a very long time. So there's no such thing as buy the dip in currency, okay? Because you could be buying several dips. They can drop
no dip.
a long way. And it doesn't mean that something is failing or an economy is failing. All it means is that it can be just rebalancing of economy. So many things make currencies move. You couldn't put them in a book on how many things make a currency pair price the way it does. Stock market's very different. You can do half an hour's worth of analysis on a particular company. You know whether it should be going up or down. Currencies are very, very different. So I can't stress enough that if you are trading currencies, be prepared to short as much as you are long. And that's why we look at both sides of the technical analysis, especially on the currency pairs. Very, very important to remember that.
Yeah, currency pairs, there's only what the central bank wants it to be in that currency. Exactly. That's what they're doing. Let's move over to gold here, Ty, before we get into some of the stocks, some of the indices, some of the other commodities. And I like this 2050 cross here on the 8 hour. I also really like the fact that we've never seen a closure point above this section here. We're looking at 817. I said in the private Discord community today, gold's looking all right. And I actually really think it is. I mean, based on this daily, based on the fact we've got long leg doji, we've got wick, another kind of indecision style candle, a bullish rejection. I love this candle. That is such a nasty. It's a dirty act by the market makers in here. Because I tell you what, when I break this down, you'll see in a second time, that is a dirty candle. And then they've gone up, false rejected, and then now they're showing the goods. I feel good. I feel bullish here. But what do you feel? I actually don't know. What do you feel about this?
I was going to go to 1840.
Well, I agree. So 1840 is definitely the zone that we've got.
If that daily closes, especially if that daily closes at a high, if that daily closes at a new high, or even close to where it is now, that's it's going to run up there in a big hurry. But that's not going to surprise anyone, right?
No, I really like a lot of things here, but I specifically like this nasty, dirty candle. So you get a breach that goes underneath. The close happens. Look at the 4 hour. And everywhere it's showing it, there'll be a lot of people going short there. I'm sure there was. Look at this. There's 2 hour, the 1 hours. And then it just full reverses it, destroys everyone that's in the short, and then goes on and says, ha, look at us. Even here, look at this. Long leg doji 2 hour. And this thing's going to close in 33 minutes. And I'm going to guess, I mean, we don't know, but we're going to guess that we're going to close above that. I mean, it's looking good, Ty. We've got this nasty rejection, which shows me they extracted maximum value. We've got a series of kind of like higher lows coming in with the test. We've got the long leg doji at the peak. I mean, what isn't there to like about this right now?
You know, I tell you what, Doily, I hope that's pronounced right, Doily. He says he knew it was bullish when they confirmed with that stop run. Yeah, true. And I'll tell you something else, Doily. The thing about gold is people have a knack of putting really tight stop losses on it. It's amazing. Like, we know and have known for a long time that gold, you've got to give it room. And people don't trade the technicals right on gold. They just decide it's going long. They don't trade it technically. They try to guess when it's going, and they put a really tight stop on. Amazingly, they try to put really tight stops on. So it makes it really easy to stop run. So, that little stop run that we're talking about there, I think you'd be probably amazed at how many people that collected, because everyone puts these ridiculous little stop losses on it. And it's a funny thing. I mean, gold, if anything, probably needs more room, yet people inherently try to actually time to perfection their entry, and hence try to put the stop loss as tight as possible. I don't know why. And that's what happens. The stop loss runs are big, and when it does move, I can't see why people just don't trade gold like they trade everything else. It is absolutely technically beautiful. It does it all the time. It was our star pupil for a long time, especially at the start of the year. Even throughout last year, technicals were just amazing on it. But you've got to trade them right. You can't go putting a stop loss that's only, a matter of cents behind where you're entering, and then you get stopped out and you're like, oh, I hate gold, it's against me. And then you see it go and do exactly what it's supposed to do, which is go to 1840 and leave you behind. You got to trade it, give it the respect that it deserves. That's my tip on gold. You've got to give it the respect, give it the right stop losses, and then give it a little bit more.
Give it
because the moves
price
are
action.
The moves
use the
absolutely.
Price action
You've got to use price action. Don't just use your gut feeling. Don't just give it a couple of dollars, because that's what old mate said on YouTube.
Well, wait, is old mate me? I mean, wait a second. Which old mate? But you are correct, Oily. Look, being able to recognize nasty stop hunts, and then realizing nasty stop hunt has happened. Now it's gone the other way. I'm more bullish than ever before. That's giving you confidence. That is very smart, huge, big brain. And you are correctly reading the market. It's actually, I think we're dropping some wisdom bombs today, Ty, on this webinar. It might be worthwhile going and checking it out. Anyway, gold looks all right. Let's move over to silver. And silver, I like silver a lot, but I don't know about that chart.
Dutch, that's that's a very sensible stop loss, mate. When I say people are putting their stop losses incorrectly, I'm talking about they're going in and buying at 1810 and maybe having a stop loss at 1808 or 1809 and expecting a $40 return. So they're expecting these massive returns, like 20 to 30 to 1 risk reward ratios with really, really tight stops. But 1780 that's a sensible stop loss. So that's one that actually makes sense from a technical standpoint.
Now, if you want to pick your poison is silver over gold. Look, I always say that gold leads. Silver's like the crazy Ethereum, version of the metal. It goes more percentage, and you will get higher swings. I don't actually like the chart at all at this stage. I'm waiting for a 2650 plus break. But you know what my thoughts are. I want to see $30 silver by the end of the year. Why not? Why can't it happen? It's
kind of like that weird cousin that no one really wants to involve in the family dues, but they have to invite them anyway because you have to do it. That's what silver's like. And you know what I hate about silver? I'll tell you one thing I hate about silver, everyone. It still nearly gets me every time on the contract size. It's a bitch. It's a bitch to get right. And I've been caught out a few too many times not adjusting the contract sizes to meet the risk on it. And it can be a bitch, but it is a weird cousin. It's a weird cousin.
Yeah, silver. Be careful on your contract sizing. Be careful on futures contracts. I had someone I forgot to tell you they called me today, Ty, and they were asking about options on oil and options on gold and stuff. The problem with a lot of those is going to be it's all about costs, roll costs, sizes as well, and it's a very dangerous kind of area. So. I mean, Ty couldn't have said it better. You don't just trade one lot in the Pepperstone platform, that's for sure. Now, Ty, let's move over to US dollar yen. We have a question here about synergies with the S&P 500. I agree there is synergies with S&P 500. I don't have time to do the study today for you. Now, this is at a key point because we talked about how it was going short. We talked about the pullback. and then now it's at the critical zone, and in many ways you'd think, oh, it's broken above, and this is looking bullish because look at the daily here, you'll see what I mean. But I do think it looks more bullish than bearish right now. I would have never shorted this position, not after it goes down so heavily when it rebounds like this. I hate those trades. I never take them. I always wait for more information. If it goes down like 70% of what you expect and then fully pulls back, no. That is an absolute non-trade opportunity. We don't want to be doing that. And what do you think about this daily 50 tie and this level?
Yeah, it just came down too far for me. I think I need to let this one play out. I just want to see this one play out a little bit.
Tough.
I don't think it knows what it wants to do. No. And if it doesn't know what it wants to do, we certainly don't know what it wants to do.
Exactly.
So I think it's a case of just let it play out, let it find its feet. I'm happy to take it either way, but I think it just needs to actually give us something. It needs to give us a little bit more than what it's doing at the moment. It's been really good for a long time, but yeah, part of the art, I think, of being able to trade at a higher level is to understand when it's time to get off the train. Now. That US dollar yen, it was the gravy train for months. Okay, it's not the same gravy train that it was a couple of weeks ago. So you just want to be a little bit careful, let it play out, and then get back on when it starts to behave itself.
Let me just quickly bring up this one, Ty. This is pound odd. Oh, what is Oanda doing on that? You see that nasty spike data? Imagine if you were trading with them and they actually did that to you. Jeez, that was a big spike, guys. I was like, that's not real. 195. You guys saw it with your own eyes. Hey, I want to talk about pound odd because we talked about pound being stronger than the other currency pairs. And Ty, we mentioned this one last week with the weekly close. I think this is incredibly significant closure out. We've got a weekly closure out. We've had a retest already earlier this session, this week. And we've got a 20-50 cross on the weekly, a rare beast. That's a rare beast. Look at what this is calling. We're getting at least a 188 to probably 189 area.
Yeah, I do like this one. And I've actually, since we've been highlighting it a little bit, I have been watching it a little bit more. And I almost did a Tuesday market watch on it, actually.
Did you?
And nearly. But the S&P just looks a little bit more attractive. But yeah, this may feature very, very soon, because I think once this starts to move, it behaves itself very technically, especially for scalping. And we know where it's going. If it continues up from here, the 188 is where it wants to go. But I think it's not going to get there in one candle.
No,
it's one of those ones it'll grind its way up there, and that grinding effect will give us plenty of opportunities to get in the smaller time frames, scalp it all the way up. You might get 5 or 6 entries. It's awesome. It's setting up for some awesomeness.
I think there's participation here, Ty, and this is the type of thing where we've analyzed it, I believe, correctly. I like where this is going today. I would love to see this continue closing up and then scaling in through the orders as Wall Street gets in on it as well, and everyone else gets in on it. Pound odd. Probably still, it was the one we discussed last week, and I still think it is the one we're discussing this week. Yeah, it's good stuff.
I had a phone call today. They called the office, the FX Evolution office. Darth Sidious, I think he's in here somewhere. He'll appreciate this. I think he'll find this quite funny. I found it quite funny. They said to me, how lucky I am that I get to speak to the Tom on a daily basis.
Did he? What a legend.
So, how about that? He said, how lucky are you that you actually get to speak to
what
him
a ledge.
in person
what was this person's name?
Basis.
Give me the alias.
Like, wow.
That's right. To the Tom. That's right. The boss man. Is that right?
The boss man. I get to speak to the boss man on a daily basis, apparently.
Oh, my God. I love it.
How about
That's funny. I don't know who that is. But thank you very much, sir. Thank you very much. That is
the fan base is real. The fan base is real.
Wow,
and for all of those for everyone who was wondering, I wasn't referring to Tom as old mate on YouTube. Okay, when we were talking about
I could be old mate on YouTube. It's all right. Maybe Tyro watches. Oh, that's old mate. He's talking rubbish again, eh? Let's get into the madness that is the indices, Ty. The people are waiting. They want to see our indices thoughts. Now, I think this is maybe where I'm getting a little bit greedy, and you're maybe a little bit more bare boot here than I think I probably will be. So for me, I'm following the trend, but let's see what your opinions are. You guys know I love the 50 exponential right now on the Nasdaq. The little 20 has been okay for picking up if you're a super aggressive, crazy person. And this morning we're going in for bullishness. Now that does not change my overall opinion, and I think Ty definitely agrees with me on this one, that if we do hit the top end trend line on the QQQ, which is the Nasdaq anyway, and if we do hit at any point, I know we're going to talk about the SP 500, the community trend line, which is this level here, I feel a good, healthy correction is coming in. And I think it could be 10 to 15% large. I don't know when it's going to happen exactly, but, Ty, I believe we got the beginnings of yesterday in the US market. We saw big banks, big returns, big prof cakes, and guess what? Buy the rumor, sell the fact. Yeah. So will that happen? Will it be buying in with the apple? Because I want to show you the apple here. The apple is going super strong. It's a very delicious apple. And will this be pushing in to earnings? And it will. I think it's just going to keep rising into earnings, and that earnings is going to come out, and it's going to get smashed. Your thoughts?
Yeah, I personally think that this earnings season would want to absolutely smash the lights out, because the market has factored in that we are in an amazing place. So I think that earnings, I think it's probably unfair on some of these companies. Well, it's not really unfair. I mean, they're already up, way probably higher they would have probably expected, even in their own lofty heights. But I think that the earnings season would want to really shoot the lights out, because I think they will be looking for any reason to start to correct it. And I think that even good earnings results may see the market fall off them, because they're not outstanding. I mean, the market's factored in outstanding results, probably unfairly. So realistically, and the sell-off will come for, on a reason that you wouldn't even expect. Like I said, it'll just happen for, it could be something stupid that you think, you've got to be kidding me. Like, we've got 100,000 deaths around the world in the last week on coronavirus, and market doesn't sell off. And then it could be something really insignificant that seems insignificant that will sell it off. And it could be, like I said, on good earnings that weren't outstanding earnings across the board. So it's going to be a very interesting earnings season.
Yep.
The weakness is going to come, and no one should be worried about that. I mean, surely no one's going to be worried about that. It's an opportunity.
Well, it will be an opportunity. I think it'll be an awesome opportunity to get in and scale into things that you like. Again, I see certain sectors getting hit up more than others. I mean, I'm kind of waiting for the sugar rush to get off the consumer discretionary train. Maybe movement to services coming through in the next quarter as well. We'll see whether that happens. But as Ty said before, I believe we're at an 8 to 10 ratio of expectations, and a 5 is a hit. So we're basically, the market is packing in. We don't want to just, hit. We want to smash it, and we want to smash it by the top range of the tolerance. US 500, I mean, for me, it's just whatever right now. I mean, I'm just looking at it going, okay, well, it's making new highs. It bounced there a little bit yesterday. If Papa Jerome comes out, I'm thinking it's still bullish. US 100, I've got the 4-hour 20, as I said. And then someone said, oh, well, how am I getting back into Apple? For me, Tyrone, what do you think about this? 2-hour 20. As long as we keep making series of higher peaks and higher troughs. Yep.
While it's making, look, a trend doesn't end until it ends. You can't predict the end of a trend.
Nope.
And this is still cracking up there. So really, you've got to take the opportunities on the 2 hours, probably a good time frame there. You've had a million entries, and it shouldn't be any different until it makes a lower high and then touches the 20, which it's not doing. That it should be fine. But the minute it does that, whoa, time to get out.
Absolutely.
That's maybe it's a time to potentially get out if you've been long for a while, but it's not the area that I'd be actually taking long. Let's just say that. Like, it'll be one of those. They're the warning signs you got to look out for, and there's probably coming towards the end where it's going to want some sort of a pullback. So you've got to be extra cautious on these moves.
I'm being so cautious. Yeah.
You've got to be really cautious. Yeah. And you're right. Look, there's nothing wrong with going long. If it comes back and touches the 20 tonight, in a couple of hours' time, you got to go long, because it's still making higher highs. But the minute it makes a lower high and comes back and touches the 20, that's your signal that, maybe it's starting to get, well, it's already extended, but that's your signal that it might start to really struggle. And that's where the pullback might come. So you got to be a little bit careful. Yeah.
This is the FANG, Ty. So basically, of course, FANG has Apple in it, but you can just see it's the exact same kind of concept. And as Tyrone mentioned, we're looking for things to tell us when is the market really in trouble. I mean, one of the big signs is going to be, for me, the Dow trend line here. If we come down, let's say we get some sell-off, see some rally, and then we get sell-off again, I'm going to have to short more market here. I'm going to have to short more market if that occurs, because for me, that is a huge failing in the core structure of the market. And at the same time, I think that we're going to get things like TLT being the 20-year treasury notes, like these are the bonds. These bonds are going to smash through our 148 and go towards the 155. Ty, bonds are smart money, aren't they? They don't pay bond managers small peanuts.
No, they don't. No, they don't. And they've got to be treated with the care that they deserve. And they're always good to watch. Like, are they the big indicator that we're looking for? Well, I mean, they will be at some point. Whether it's the timing's a bit hard on them. There's no question about that. They are a little bit hard. But they are only the smart people trade them. Like, you haven't got any mugs trading them, that's for sure. It's not like the options. I mean, people say with options, like when people start to really get into the options calls or the options puts. You got to remember, most people who trade options, half of them don't even know what they're doing, right? They're actually using options because it's a good leverage tool.
Exactly. In the US, it's just like, hey, buy option. I could get 10x leverage. Sweet.
Exactly right. So you got to be really mindful of that. But when you're talking about bonds, only smart people trade bonds. The smart money trades bonds. Okay, so and big money trades bonds, probably just as importantly. So that's what you've got to be really mindful of. That and it's hard to time though. Like it's not as easy as just overlaying it. It can be very difficult to time. But what it can do is give you a precursor of what's probably going to happen in the sort of interim term, something to be prepared for. That's probably the best way.
I mean, when you think about it, this is not a shabby return on bonds on the 20-year.
No.
On the weekly, they got 66% over this period. They scaled in what they considered late cycle. Why is it going up over here? Because they're nasty creatures, and they know that they're somewhere in the late cycle. They don't know when it's going to crash, but they're going to scale in. They start scaling in immediately after 15th of January. Why are they doing that? Because they see problems on the horizon, and they were smarter than the average bear. The market didn't crash immediately. It trapped nasty retail traders. Well, not nasty retail traders, great retail traders. It trapped them. And then the bond market showed it all coming through. So, Ty, actually, you mentioned something, and I think, again, options is, a big bread and butter play for us, and it's something that we do a lot of. So when you're looking at a market like we're looking at right now, where we're talking about a matter of 2-3% that we see upside here before the bears regain some kind of control in the markets, options can be a very good strategy here to not only limit your risk when you're if you want to take longs or whatever, but also to take advantage of the short and to start thinking about, hey, what is my plan on this? Do I want to be potentially covering up some positions? I might want to hodl these positions and I want to hold them. But if I had, let's say, Apple, and Apple reaches a 160 mark and everything else is hitting a resistance, and we're seeing like a massive number on the Greeks and implied volatility is through the roof for the sell call, would we potentially cover up at this stage, Ty?
Yeah.
Yeah, well, that would be one of the things that you would look at, because it comes down to percentages. If you can make 12% covering up or 6% covering up, and that you think it's a 70-30, but you still want to hodl the stock, and you don't care if it keeps going up anyway, that's a strategy that makes a ton of sense at these points.
Oh, 100%. I mean, if you're not covering up at these levels, like far out, are you really trading options? No.
Probably
you can't be. You can't be. Now, and look, when we say cover up, we're talking about, basically making that extra cream at a very, very high level, right? That's what we're talking about. So, and the level and the premium is going to be high, like really high, especially on some of the, because the volatility is high. Yep. So, realistically, why wouldn't you not? Why are you not?
The same thing happens, when I think opens happen. And sometimes, one of the best strategies for a lot of people is selling credit spreads and selling the put credit spreads. So let's give an example of what happened last week. I just want to show everyone some of these things that people consider. So let's say you had AAPL, just as an example, and you were on the 2-hour chart. And let's just say we have a gap like this one occurred. Okay, so we already know at this stage that we want to buy the 20 moving average. That's something we want to do. But we also want to limit our risks, and we're interested in potentially selling premium. There is the opportunity to actually put in a premium spread right at the money here for a week or two away or whatever we think of, where we basically sell premium to someone else. So we basically, of course, sell and then cover it up with a buy put underneath. We make maybe even a 1-to-1 on our money. And you might think, well, that sucks, Tom and Ty. But you could do this quite a lot across the board. And what you're doing is when you put a spread in, you'll be surprised how incredible the premium is in the morning due to the gap, due to the fear that is in the market. Now, you might be getting even better than 1-to-1. It might be a 2-to-1. I don't know what it was at that stage. But I'll say one thing about this. If you found a good technical and you marry that up with credit spreads, if you marry that up with covers, you marry it up with all the other options, it's amazing stuff.
Darth said that weekly OTM calls on Wednesday. What can go wrong? Yeah, nothing. Nothing can go wrong.
I'm not saying right now, bro. I'm saying this is the concept that you could use. So you never want to use. I don't even look. Tyron and I don't even use weeklies very often. We use usually a month or 2 months. And main reason is it's like swing trading. You're eliminating a lot of the risks by allowing yourself and allowing the market to play out. Like if I was say I had a short bias right now, I could put in sell put, bear put spreads, and I could put them in, and I'd put them in for 2-3 months, and I'd be incredibly confident that over that time I'm going to get in the money. Now that's my feeling about the market, but if I put in a weekly, I would be sweating.
And you know what? If you're throwing in a weekly, especially at the moment, you're really gambling on the fact that the market's going to fall right here, right now. Because if it doesn't, you've blown. You have to roll it out. And if you get into the rolling game on a weekly basis, it can get annoying and ugly, and you don't want to be doing that. You want to be going out further than that. 3-4 weeks even is a little bit short, but 4 weeks, then you can go into 8 weeks. 3 months is 3 months takes us past September. And that's when we think the market's probably going to. If the market's still up here, it hasn't come down by the end of September, I'd be absolutely astounded.
Yeah, I would be too. I can't see the market going on a rocket ship anymore. I could see it kind of moving up a little bit more to those trend lines, Ty, and the reason why is just
I can move up a little bit more in the
just
meantime.
To get everyone. They want to extract max value into earnings. It kind of reminds me, actually, when you think about it, what are the stocks that are going? If you look at the top 10 retail stocks, I bet you a lot of them are Microsoft, Apple. We already know that. Tesla, etc. And they're all running into the earnings event. Nvidia also went bonkers. So these kind of stocks that are very heavily held by retail traders are all running into... It's an interesting point. I wonder if that's the trap in itself. We've got a question here about US oil. I'm bored of US oil, but that's only because it hit our target. And when something hits our target, we often, as traders, we're kind of like, okay, cool, see ya. We'll come back later.
Yeah. It's the same as the same as the US dollar yen. It's given you all the fun.
Yeah.
You should have made, you could have bought a house on the money you could have made on oil.
Yeah.
Oil
trade was pretty good.
I think you need to let it go now and just let it let it find its feet. I think unless you're really scalping it, and I think it's not the easiest scalp oil. It's not an easy one to really just get in there. I don't think it's a very easy scalp because there is a fair bit of stop hunting on this one too. But it's given us a bloody good ride. It's one of those ones now that needs to find. It's either gonna get above 76 and keep going, which I don't think it will, or it's gonna start heading down back to the mid 60s. So. Until it does one of those key things and starts to actually really start to trend and get out of this little shit zone that it's in at the moment, oil should just be left alone. That's my opinion.
I feel
you've got to know when to let it go. You've got to know when to let these things go. You cannot trade the same thing all the time. I can't stress that enough. I know people get hung up on it and they don't know when to let it go. It's like having a bad girlfriend and you don't know when to let it go. You got to let it go sometimes, don't you, Thomas?
It's true. All right, let's go down here to scroll through to NEO and others. When we won't use NEO because I don't want to do that. I want to talk about these Chinese stocks, Ty. Now, these stocks had the FUD they got fudded out of control. The fear was real. And I think that, we analyzed them here. And, a lot of people will say, well, is this a good trade, the pick down to here? I think it is still. And I would still load at this zone. And you can't go back in history and say, oh, I wouldn't have done that for this and this reason. You got smashed by the CCP, all right? It's what happened. And when we go over to the weekly, I think you had another great chance at it. This weekly trend line is very cool for Baba. And I specifically like that. But I want to show you, Ty, JD. And I want to go to the daily here. Another nice support weekly as well. You can see. Go have a look at this daily. What do you think about what happened down here?
It's an interesting one. That's an island gap. You don't see them a lot anymore. Actually, no, I suppose in the stock market they're a little bit more prevalent. Is that data daily?
Yeah, daily.
Yeah, interesting.
So this kind of setup, especially coming off support and the Barber setup, and we know they trade hand in hand to a degree, to me is a relatively bullish signal. And then when you think about it, we know our targets, which are $80, and we also know that if it breaches this time around, it will continue to get movement into it. Now, we had a question before, what happens to the Chinese market if the US market starts crashing? I don't actually like investing in this market over the next coming years. I think there's going to be a lot of globalization slowdown as we see more internalization of a whole bunch of industries, and that's going to hurt this market a lot. However, technicals to technicals, and 80 into something like an 86, it makes sense to me.
Makes a lot of sense. Yeah, no, it does. It does. Hey, let's check out. Musty has asked.
Dead.
We don't do any Euro stocks. Okay, all right. You know what? We look at the
Nestle.
We look at the CN50 for Ray every single week. Let's do a special. What do they want? They want.
No, I'll probably.
Musty wants AMG.
What?
On the Euro next to Amsterdam. All right.
Let's do it. Look in a second. Firstly, just for you, Sid, I'm not feeling it, Sid. I'm not feeling your AMC, Sid. I'm sorry. Sid, you better not be buying that today, man. 38.10.
He's not making a case for that, is he?
He loves this thing so much. I don't know. Like it's so sick right now. That is on the Euro next. Yeah. Oh yeah, it's pretty good. Okay. Do you want to walk us through it, Ty? Well, firstly, you like that weekly. Weekly above.
We're definitely on the right. We're definitely on the right one, yeah.
Yeah, that's the right one. What do you think about that? Tasty.
That's very similar to the one we just saw.
No, I think that's trend line, by the way. Oh, yeah.
Oh, you can make an argument for it.
Oh, I don't mind. What is this thing? Metal fabrication, Ty. $927 million. In Europe, that could be a large company. I'm not sure. In the US, it's a small fry. No, that's a good chart. What do you think? Break that down.
So it's not AMG. It's not the Mercedes version of AMG.
No,
obviously not.
You got AMGs on the mind just because you owned AMGs.
It doesn't matter. Actually, it doesn't actually matter. It actually doesn't matter what company it is actually when we're looking at technicals anyway, and the technicals look strong, right? So. You've got a trend line that has just been broken. The price action's good around. I love that. We love the hammer candle that started at the bottom of all that. We've got the indecision above the moving averages. Yeah, it's pretty good. I think 30. Oh, yeah.
I like.
Can we just go out one more time, Frank? Can we just go out to a weekly again for a sec?
Yeah, the weekly looks sick.
Yeah. Yeah, goodness. Yeah. I think the upside on this is quite good. Yeah, I think you've got $2 or $3 of pretty easy upside here, really, if we get that.
Yeah, I agree. It's not bad at all. Well, thank you for bringing us some actually good TA. Sometimes the people give me, I'll give a shout out to Echo Aurora here. He pays for it, but he gives the community some kick-ass technicals, man. He really does. There's some of the technicals you guys bring up in the community. This makes us happy. If we always saw great technicals that you guys share, please share them, by the way. Please share them. We need more from you guys because we can't see every stock. But if you show us good technicals, damn right, you're doing a great job. And this is exactly the type of thing we look for. Do I know anything about this company? I'd probably go check it out before I trade it just so I knew what it was. But yeah, it's the right type of stuff. We're probably looking for a 30 closure.
just for fun, let's add it to the watch list, and just
AMG,
just for Musty, let's put it on the watch list, and let's have a look at it on a weekly basis or even a monthly basis, and see where it goes through from here. But I reckon at some point, you're going to be at 33.84, I reckon.
Yeah, I think that looked okay. The olds, I guess it's probably near the close here, Ty, because it's 9:56 p.m. But yeah, what I guess we wanted to say was, look, there's still some opportunity in the long stocks. However, this is a time to be cautious, a time to really like solidify your positions, to have a plan. And I think what we want to say to the community is you've got to have a plan. You know, if the market crashes 5% in the next month, 10% in the next month, what are you going to do? Do you have stocks that you want to invest in? Do you have stocks that you want to specifically trade on dips? Do you have a short plan? Do you just want to buy the dip at certain key levels? Have you done the work? And if you don't have a plan, then what are you going to need, Ty and I, to come up with a plan? We can't do it, guys. But what we can do is we can tell you that it's important to always have that thing. I've always got in the back of my mind, you know, the next kind of stock that I want to buy at a certain price. That I want to hold in a portfolio during a dip. And if you don't have it, then when it happens and you get a pandemic style crash or a GFC or whatever else it is, you won't be prepared. And that's nothing worse than that.
Mr. Buffer 08 wants us to basically do a European session webinar by the sounds of it, because we've got one step in the right direction. Okay. Hey, you know what? I'd love to do more webinars, but we're obviously restricted on time. And with Thomas doing his live stream every single night, and with me being lucky enough to talk to him on a daily basis,
True,
it makes it hard to does make it hard to cover a lot. But if you've ever got ones that you want us to have a look at, absolutely put them in the room. Like, we love checking stuff out.
Yeah. Good TA is good
TA. Good TA is always.
I don't want to see no $100 million weird companies though. I want to see like big ones, big 500 millions plus.
100%. Now, just because it didn't happen at the start, it doesn't mean that this webinar was for educational purposes only, and you must seek financial advice on any decisions that you make. Normally, we've got the slide up, but
we do.
I think
it's underneath. Risk warning. This stream is not financial advice. See below. It's there. I'm telling you, it's everywhere. No. No, you want me to bring up the alert? We'll bring the alert up.
I mean, I would have thought it would be common sense, but you know what? We're going to bring up the alert.
I have to just wait a second. I don't know which one I've got here.
Reason you guys probably think, why the hell do you guys have to do this? Why do you even bother? We have to do it because we're licensed, guys. That's why. We're AFSL licensed in Australia, and we must do this because, you know, technically speaking, we're not just you know, old mate on YouTube giving random advice. We actually do we give real advice to real people. So in other settings. So when we're doing our webinars, it is important that we actually stipulate that we don't know everybody's personal situation. And although it seems to go without saying, we will satisfy it. So there it was. All right.
Also in the description down below for you to check. So QCOM was the last one, Ty. Look, I'm still positive on this type of technical setup. We've got a 143 that we're looking at for a breakout. And then I think participation enters. It pulled back a bit more, got a bullish hammer, nice follow through, little pullback yesterday. As long as the Papa Powell doesn't disrupt the market, for me, it's still a good trade. Nothing wrong with it. Slow, but you have to expect that with QCOM.
Yeah, 100%. I need to hit the gym. I'll tell you what, Dave, I went to F45 this morning at 5. I did the 5:30, and it was the hardest cardio session since lockdown, and I nearly died. And I was up late last night on the stream, and it hurt. I'm not gonna lie,
it's rough. Nothing's more rough than living the US stock lifestyle, I tell you what. But anyway, if anyone wants to come along, I'll put the gauntlet down. It's important to have your fitness up there. So I've hit the gym again, but my God, I'm unfit. I'm even worse than you.
We are getting fit, and we are getting ready for two things in particular. We don't care about the stock market. We don't care about trades. We care about two things. We care about our conference in Queensland in October, and we care about our conference in Vegas next year, COVID willing. And that's what we're getting in shape for. Don't worry about that.
I better get really to work then, guys. All right, no worries. Thanks so much for joining us this week. As always, we'll see you in the private community. For anyone that hasn't joined the private community, you can check us out at fxevolution.com. That is FX. In fact, I'll type it in for you like this, and you click it. And there's some people that haven't joined, and then you click 7-day trial.
Hey, do you want to just do a very, very quick demo of our new feature in the Discord room? Because then maybe people haven't seen it.
Yeah, but I've got to hide us. One sec, because the way I cap. All right. Here we go. Yep, I can do that. So here we go. And let me go to... Oh, I've got people talking to me. So we'll scroll down through here. So I have added, and Tyron and I have added this new extra room. I'm deleting certain sections that I don't think are super useful for people. And that is that we've got manual requesting of data, where if you click on the little pin, you'll be able to see all the different symbols for how you can get hold of stuff. So if you want to see, I don't know, news for a specific stock, you can just quickly search it. If you want to see unusual flow, so that means unusual trade flow or something like that, you can bring it up and it'll automatically send you that information. So you just put whatever the code is and then the stock that you're looking at. We've got intraday trading concepts coming through here. We'll see whether they work out and whether they're good. But more importantly, we've got analyst upgrades. We've got insider trading when there is some. We only just added it, so that will come through when it happens. We've got tradie flow, which is quite good in terms of the amount of calls and puts put in. We've got important news, which just hits you all the time with some great information for the big stocks. And then on top of that, we've got the option sweeps and equity prints. So equity prints is good because it shows you big block trades. So if you've got like a long trade idea and you start to see big blocks come through and those are in your favor for that particular stock you're looking at, hey, we always say follow the Wall Street money, and if there's big money coming into it, why not? So it's all there, guys, and that's for, of course, the private members. And if you guys like that, let us know. We are trialing it for the next kind of 5 days. So if you have any feedback, please let us know in the private group. Tag Tyron or myself, and we'll hopefully be able to keep it.
Absolutely. For those of you who are asking about the conferences, we're going to have firm times and dates very, very shortly. Don't worry, we'll announce it everywhere, Dave G. Thomas will be talking about it on YouTube, and we'll talk about it in the webinars as well, because we're very excited about it and cannot wait. I just hope we then get shut down. Anyway, that's all right. That's a story for another day.
All right, guys. Yeah. Thank you so much. We'll see you soon. And yeah, I look forward to seeing you hopefully in about 27 minutes. There'll be a few angry people, I think, at the YouTube today. I pushed it back half.